Hello, Oak Bloke here, and this is a article about Greggs. So Greggs PLC in the news, I suppose, uh, probably not in a good way. Um, Posted some weak results, and a lot was spoken about the weather. It was too cold, and then it was too hot. So that affected consumer behavior. So I wrote this article on my Substack, which is theoakbloke.substack.com, uh, and just covering off the results and my view of where we go from here. So I think the first thing I'd say is just kind of introduce this to anybody who doesn't know Greggs. I imagine most do, but this is a chain of bakeries, convenience shops, I guess, dotted around the UK, only based in the UK, not based outside the UK at the moment. They sell pies, pasties, sandwiches, hot drinks, cold drinks, donuts, and various other things that people, and lots of healthy food as well, porridges and all sorts of things like that. So very much based around good value. It's from a company from the northeast. Been around for I think 40 years. So very fast growing business as well. So we'll be talking about that. 1.6 billion market cap. The share price has dropped quite a way, so that puts it into potentially value territory. See there, I've got price earnings, prospective price earnings for 2025 of 12 times, which for a company like this, I think is extremely good value. The other thing I would mention that I'm going to talk about on this is the Tesco deal, which some people seem to have noticed, but not all. So we're going to cover that as well. So let's start with the results themselves. So I think part of this has to be, which profit are we going to look at? Are we going to look at the trading profit, which is up? And this is year on year. So first half of last year, first half of this year. By the way, first half and second half are quite different. It looks like the second 6 months of the year are always much more active than the first 6 months of the year. So I guess that's seasonality. If you'd asked me to guess when the busy times of the year would be, I wouldn't have said it was so much weighted towards the second half, but it is. And then looking back over about 6 years, you can definitely see a pattern there. So trading profit up. Trading profits, of course, what were their sales minus their cost of sales and their selling costs, so sell SG&A. So that's actually a good result. It's not a huge jump in profit, but it is a jump in profit. So when people say, "Oh, the profits are down," well, which profit are we talking about? The operating profit was down, and the profit before tax was down, but net profit after tax. And that was partly because the comparative last year was included some stuff around topping up the pension scheme, stuff like that. But actually, the comparative is up year to year net profit. So I just question, this assumption of all profits are down. Yes, in a manner of speaking, but depends which profit we are talking about. I'm going to be talking about CapEx, so CapEx being capital expenditure, because that is compared to the 6 months of last year, that's actually up 70 million higher than the year before. And there's a couple of things that are in the numbers as well. There's a hit from just the timing of refurbs. There's a hit from annualized costs that have kicked in, but that didn't exist, or began sort of just on the cusp of the end of the period of last year. So you're getting the full 6 months sort of this year, but you didn't have them last year. So there's some aspects like that, and a few other things. I cover it in the article. So if we go down to here, you can see this profit bridge where you've got so the things that sort of comparatively changed from last year to this year. There was more finance costs, so Greggs had borrowed more, and they borrowed more because of that 70 million capex, extra capex. That if you're accelerating your refurbishments and your investment into new facilities, then obviously it's going to cost you to borrow that money. Lease charges were up as well, so that's kind of, as you open more shops, you're going to have more leases because Greggs don't own their shops; they lease them from a landowner, from a shop owner. Capacity costs. So this stuff here, the refit phasing, some of this stuff was just down to timing. I think the thing that I would particularly call out is obviously £49 million of cost inflation. I mean, that's like 5% of sales. So that's actually quite a big chunk. If there had been no inflation, if you actually just compared the sales um, year to year, I mean, this number here, 39 million, that's the actual growth that's going on at Greggs, that the underlying growth, and that's just in 6 months, folks. So I mean, if you take that over 12 months, because obviously that's just for 6 months, and bearing in mind that the second half is always busier than the first half, um, I mean, the sales growth is pretty much about a million. Sorry, start again. 100 million, over 100 million, maybe about 120, something like that, because it is about 2.5 times in the second half, so maybe even 140 million. Now, uh, that's a 7% growth in a year. I mean, that is not bad. And I've considered as well, because I did sort of start to think, well, okay, but what does that look like in terms of, is it simply because they've opened more and more and more shops? Like, yes, they're selling more, but that's because they're selling more because they've got more shops and they've got more costs. Well, that's true as well. But what you'll see here is, and I've gone back to 2015. So back here, they were selling on, and this is per shop. They have this many shops in each of these years. Okay, so it's grown from 1698 to 2649. Now, if they were cannibalizing their sales, what would you expect to see? Common sense tells you would expect to see this number. This is cash generated. So this is this number here divided by the number of shops. This number would be dropping. Yeah, this number would be dropping. It would have to drop if there was cannibalization. If you've got, let's say you sell £1 million worth of widgets, you open a second shop, and the second shop's just cannibalizing the sales from the first shop. How many widgets have you sold? £1 million of widgets. How many did each shop sell? 500,000 each. That's cannibalization. Do you see a single piece of cannibalization? And obviously, you need to take out inflation and other things like that. I mean, between 2015 and 2025, probably about 45, 55% inflation. So, I mean, yes, inflate that number there by 50%, let's say. So, I mean, we are only talking 30% after inflation growth per shop, but it's definitely there, isn't it? Definitely there. So I think this idea of cannibalization, show me the evidence. Now, obviously, some clever whatever person would go, aha, I've caught you out here, Oak Bloke. Your number here, yes, clearly there's cannibalization because it's more than halved. But remember, the first half is always smaller than the second half. So anticipating that somebody was going to kind of put some silly comment at the bottom of this video to say, oh, well, your 2025 number's so much smaller. Well, back 12 months ago, that was the cash generated for that many shops in the first half. And then the second half was about 80 million. Okay, just to kind of give you an idea. So that number is the first 6 months of that number there. So in other words, this number here is obviously slightly ahead of that number there. So again, I would say, what cannibalization? There isn't any evidence of that whatsoever. Now, it's not just about looking at sort of revenue per shop, and obviously, just to be clear on this, I mean, this is sort of taking this number here as though all the sales are being made from the shops. They're not. There's sales being made through Iceland, through the supermarket, in frozen goods. There's sales being made through the outlets. So this is kind of food that's more than a day old that gets sold off on the cheap. We've got sales via Uber Eats and Just Eat and so all of those delivery things anyway. Arguably, they don't go through shops. I mean, you might sort of link the sale to a shop, as in the shop is supplying the order, but you might say, well, that's not really a shop sale. That's another form of cannibalization. So obviously, I haven't got any separation of what those segments look like or what those numbers look like. I have done some work around what the numbers look like, but we'll come on to that later. I'm going to be talking about Iceland and Tesco a bit later on. But yeah, the first point I make is, well, okay, which profit are we actually talking about here? Because on some measures the profit's up, and on other measures the profit's down. I mean, yes, I can see that obviously the first half of 2025 wasn't spectacular, but it wasn't that terrible. I mean, when you actually consider, this number here is very encouraging. I mean, and this was in a, like as Greggs themselves said, this was when we had storms in January and freezing temperatures, and that affected consumer behavior. We had heat waves in June, and that affected consumer behavior. Even so, and this is just on the like for like. So actually, this isn't new shop sales, because that wouldn't be LFL, would it? That would be this number here is the new shop sales. So actually, again, we can sort of quantify that. So 5 million, okay, has come out of basically, well, it's that number there, isn't it? I suppose we'd have to kind of work out what the interim number was. So it might be somewhere halfway between that one and that one. So let's say it was 2,550. I mean, that's sort of 100 shops. 100 shops has generated 5 million. Well, that's very sort of more or less in keeping with this sort of 130,000 per shop per year. Now, obviously, when I say 100 shops sometime during those 12 months. So if they were sort of opened on average 6 months into the year, then that's on a annualized run rate of 200,000 per shop. £5 million, 100 shops. But where it's only sort of you're getting 6 months on average of their trading. And obviously, when a shop's brand new, a new Greggs is brand new, it takes time for people to know it's there, and sort of, it wouldn't necessarily be the case that the sales on day one are as strong as the sales after a month or 3 months. Yeah. So anyway, that's kind of the first point I'd make, is about this profit bridge and how most people seem to have just ignored that, which I find very surprising, because I think there's some really good insights that you can get from that. I think the second thing I'd say is just to kind of, I mean, when people are saying, oh, the results are down and the results are worse, well, hang on a minute. Let's have a think about how much investment's going in. Now, in my prior article, I wrote my first article on Greggs back in March, and this was Greggs, how does it measure up? This was one of the things I looked at in here, was this significant capital investment in growth. So this was sort of what their plans were. So they said, yeah, we're going to spend, we spent 200 million last year, we're spending 250 this year, and our plan next year is to boost it again to 300 million. So they're going for it with the investment, and you can see it here. Supply chain is a big part of that investment. See, shop equipment, they're sticking in cable comms, so that rather than having like dodgy broadband, they've got fiber cable to each of their shops. Why do they have that? Well, basically they've got SAP HANA, S3 HANA behind the whole scenes. So basically, the minute you go in and go, I'll have a vegan hot dog in your local Greggs, basically the factory knows about that. So when the factory is, I mean, let's say you live in Aylesbury, when the factory is sort of saying, right, how many vegan hot dogs do we need to kick out for tomorrow? Like, bing, 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 bing. All these vegan hot dog orders are pinging through. So the ERP system uses something called MRP, or Materials Resource Planning. It's working out exactly what's needed, because guess what? If they don't sell those vegan hot dogs on, well, today's the 30th of July and tomorrow's the 31st. If they, so let's say they're manufacturing the vegan hot dog today, goes overnight on a truck, bang, into Aylesbury for tomorrow. You go back in for another vegan hot dog tomorrow, or vegan sausage roll even. They don't even sell hot dogs. Don't worry. Don't worry. I'm sure one day they will. But no, they don't at the moment. I don't, or at least I don't think they do. I don't shop in Greggs that often. I'm sort of more of a, when I'm out and about. Actually, there is one a couple of miles away from me, and when I get my hair cut, sort of there's a Greggs just down the road. So, has been known to sort of a post haircut Greggs. Yeah, but anyway, I digress. Investment is what we were talking about. So with investment, you've got to really realize like how much money is going into now, and the other thing, like the reason businesses invest into their own systems, they invest into supply chain, they invest into shop equipment, they invest into refurbing their shops, freshening up their shops. Why do they do that? They'll sell more, and they'll reduce their costs. It's as simple as that. And like when people are committing to spend, I mean, these are the numbers for these 3 years, but actually when you go back over 5 years, I mean, you're talking not far off £1 billion. Oh, excuse me, 910 million to be precise. And of that, I mean, obviously back here it's really ramped up. We're talking 750 million, £750 million in in this year, last year, and the year before. Okay, 750. Depreciation each year is that. So that's kind of me sort of saying, well, all well and good doing your refurbs, but the ones you refurbed a few years ago, they're starting to get a bit tired, and like your shop fittings only have a certain lifetime. Your factories only have a certain life. Everything has a certain lifetime. But when you make an investment decision in business, I mean, why are you doing that? As I say, to increase your sales, to decrease your costs. There's nothing else. I mean, maybe to replace people could be another reason. Rather than having lots of manual workers, maybe one day in the future, rather than having a human being saying hello to Greggs, you'll have these robot arms handing you your Greggs sausage roll and your vegan hot dog, if they sell that now or in the future. Um, like, and this stuff is not science fiction. I mean, this is sort of real. That Japan has robotized a lot of its food service. So if you had a Greggs in Japan, that would be very likely to be the case, that you would have robots serving the food, and also that means that you can just speed up the processing times. I mean, if you walk into a certain other fast food restaurant, you can probably think which one it is based upon the video there. That I mean, they have mechanized so much of their food preparation. I don't know if you have sort of ever bothered to look behind the bar, behind the counter, but you'll see there's like little trapdoors, and like food arrives in a little sort of like sort of almost like one of those sort of lifts that they had in the olden days to sort of they'd sort of ring a bell and up would come the. I mean, they've basically got sort of actual factory production lines where burgers and different things are just literally being produced by machines and then presented for the human being to then hand over to the customer. So there's an awful lot that can be done, and I think the thing I would say here is that 750, the investment decision that would have been made, I mean, the ROI, the return on investment, at least 10%, at least, if not more, 15 perhaps even, but let's say 10. I mean, on the basis it's 10, by investing 750, that's in the expectation that that is going to make a 75 million pound difference to profits. Okay. Now, whether it gets there or not is another matter. Obviously, you still need the customers coming in buying the food. You still need the footfall. You still need the you still need to be able to buy the ingredients. You still, there's obviously lots and lots of ifs and buts to making these investments, but on the basis that they are automating, and obviously this robot arms is a little bit of an extreme example, perhaps, maybe not. Science fact, not science fiction, but this kind of automation is basically what that part of what the big part of that 750 is. So I think I would really call that out, that when you're sort of considering and again I'll bring this back up on page. So this is the cash flow generation. Now again, just bear in mind that that 150 is not 50% of that number there, because remember it's sort of the second half is always stronger. Um, uh, but yeah, you can sort of see in all of the full years up to here. I mean, compared to sort of 9 years ago, like, it's generating triple the cash, nearly triple the cash. Operating cash flow nearly triple. Okay, the investment. Okay, look at that number there. So that adds up to 972 million. So just a shade away. And in fact, if you include the first half 2025 number, I mean, look at that, 173 million invested in the first half. Last year for 12 months they invested 217. So in other words, that minus that, I mean, you're looking at sort of what, 40 million, another 40 million, and they would have invested in 6 months what they invested in 12, and that number there is 18 million away from what they invested in the whole year of 2023, and that number there is 1.75 times what they invested in 2022, and it's 3.5 times 2021, and it's nearly 3 times 2020, and so on, double 2019. Like, when they say the profits are down, why are the profits down? The profits are down because they're pouring money back into the business to grow the business. In other words, personally, the number I'm interested in looking at is this number here. Yeah. And this number is growing. I mean, obviously, you've got to think about cash generation from operations. Great. Well, what's happening to tax? What's happening to overheads? What's happening to, and you can see here, I mean, as the business has grown, obviously the costs have grown. Yeah. The costs here are, again, sort of pro rata. The costs here are sort of, they are growing period by period as inflation grows, but also as the number of shops grow. I mean, like here, the selling costs were 460. Here, the selling costs in 2024 were 1048. So that the costs have more than doubled. And the number of shops has not more than doubled. The number of shops has increased by about 55%. So in other words, over 10 years, but we sort of said, inflation is about 55%. I mean, selling costs therefore have dropped slightly, and that's what you're hoping for. That's what you're expecting to be able to get, is that, you're getting more and more efficient. So therefore your costs actually are dropping in real terms. Okay. But equally, that your revenues, obviously revenues being 2.5 times what they were back here. So even though in real terms, my costs have increased in proportion to my number of shops, which is what you'd expect. The more shops you have, the more costs you're going to have. It's just common sense, isn't it? But the amount of sales has more than offset the costs, is the point here. And obviously profits. This is now what, 2.5 times more profitable than it was back then. Okay. And the last time, I mean, I think this is a very telling stat as well. If we say, let's go and look at, what what was Greggs up to when it was last at £15 and 66p? So we've got to go back to the days of COVID, I believe. I might be wrong on this, but I think I'm right in saying that. So at the height of COVID, it dropped to £11. Now I have seen people say, "Oh yeah, yeah, we think Greggs is going to drop to." I saw some commentators say, "Oh yeah, we think Greggs could drop to £13 because some quacky algorithm website tells them that." I mean, apart from the fact that these algorithm websites are notoriously, well, I'll choose my words carefully, rubbish, I think is probably the politest way of calling them. But anyway, yeah. So I mean, in the year that it was £11, I mean, it lost money. It lost money. Sales dropped by a third because obviously they had to close up all the shops, and we had lockdown and all the rest of it. Cash generated dropped by a half. So the business was in a right pickle. Like, okay, it didn't remain, because obviously some of this was sentiment. It quite quickly, as you can see here, it quite quickly bounced back to what, 16, £17, and then sort of what was sort of by the end of 2020, it was at the price it was today. So you can remember at the end of 2020, we were in the second lockdown, weren't we? The first lockdown had come and gone. Like, yes, some people had died. It was tragic, but we were all sort of doing our clapping was it Thursday? I think it was Thursday. We were all clapping on a Thursday for the NHS, clonking our saucepans, wondering what was going on. But by about December, I mean, the world had sort of turned back to normal a little bit. I mean, obviously, theoretically, there were still lockdowns and other things, but we kind of knew that we weren't going to sort of be dying in our tens of millions, hundreds of millions. The pandemic was bad, but it wasn't bad, I guess. So by that point, Greggs was back to sort of 17 quid, back to, higher than it is today. Like, but we were still in lockdown. Greggs were making losses. Like, today, right, in one half a year, it's made more profit in the weaker half of the year than it made in the whole of 2020 of cash generated from operations. And yet the share price is back to where it was when it was in lockdown in 2020. Not quite at the April low, but certainly at the sort of October 2020, November 2020 price level. And by the end of 2020, Greggs was a higher share price than it is today. That makes no sense to me. No sense whatsoever. So investment, number of shops, no cannibalization. I mean, let's talk a bit more about cannibalization, because these stores that are opening, they've opened sort of that period to that period, 1.2% more shops, that period to that period. So in the current period, they're increasing it by another 4.1%. So at this sort of speed, and based around the so kind of part of that investment is into distribution centers and manufacturing. So again, that's going to drive down cost. And what I was saying before about 10%, I mean, that'll be part of it. If you're not having to make the stuff up in Newcastle and then put it on a lorry to, let's say, Cornwall, but you're making the stuff further south and then shipping it down. So you'll have one factory serving the south, another factory serving the north. Makes sense, makes perfect sense. Why on earth wouldn't you do that? But also, why would you not have all the distribution centers you need and have the automation in those distribution centers? And that's where all these hundreds of millions are going. Those are, we're only 6 months, well, 6 to 12 months. We know it's going to be first half of 2026 that the new factory opens, but we're 6 to 12 months away from that kicking in and making a tangible difference to profit. Around the expansion, the new factory and the new distribution centers will support up to 3,500 stores. So that's how many stores they have today. That's how many stores they could get to. At that run rate of increasing stores, about 100 and something a year, there's another 5 years of growth there. There's another 5 years of growth there before they hit capacity of what they can supply. So the next question would be, well, can they increase the number of stores to 3,500, or is it all saturated? Well, I mean, apart from the fact that the evidence of revenue per store says it's not, the evidence from the app says that it's not. So the app, they've got over a quarter of the people using the app. So of the 2 billion of Greggs products that are purchased, 500, half a billion of them are bought via the app because you get bonuses and treats and all the rest of it. So happy days. But the advantage that app gives is if you're normally going to the Greggs in Aylesbury, and then a store opens in Buckingham, and you are now going to the Buckingham store instead of the Aylesbury store, they know that they've wasted their time and they've cannibalized their business because, as I say, there's no new net sales. The income from the Aylesbury store goes down, the income or the revenue from the Buckingham store goes up. They're no better off. Yeah, they know about that. So they've worked it out and they said it's 5% of cannibalization. In other words, there is a little bit, but it's nothing much. It's not worth worrying about. There's plenty of business out there. And not being funny, like, there are Greggs that I could drive to. I don't, because they're not convenient for me. They're not on my, they're not on my commute. They're not on my sort of, whatever. Like I say, if I get a haircut, I'll get a Greggs. But otherwise, I don't get a Greggs unless I'm maybe away on business, traveling, and But again, like there's a lot of places, and I travel all around the UK. A lot of places that don't have Greggs. Anyway, the other thing I'd say is just go and look at their shop finder. Like this is Northern Ireland. Do you notice a few places in Northern Ireland that do not have a Greggs? Let me move my face out of the way, or let me think what I can do. Yeah, so there we go. There's a little place called Newry. That's quite a big town. No Greggs. You've got Enniskillen. No Greggs. You've got Bangor. Quite a big little town. No Greggs. Carrickfergus. No Greggs. Maghera. No Greggs. Coleraine. No Greggs. Ballycastle. No Greggs. Londonderry. Big city. Londonderry. Not a single Greggs. You could stick several Greggs in there. No problem at all. No problem at all. So, and there's others. I mean, obviously, some of Armagh is another big town. I mean, Armagh's not a small place at all. No Greggs, so like that's one area. I mean, in my article, I talk about Cornwall as another example. I mean, I'm just literally just picking anywhere in the country and kind of going, well, where could I, like, if I were planning Greggs expansion, like where would I put stuff? And I found 10 potential locations in this part of the world, and then I thought, well, let's go for the home of pies. Where better? And there is one slap bang in the middle of Wigan. I couldn't, because I was hoping that there wouldn't be a single one. I'd be like, yes, come on, we'll take on the local pie makers. We'll sort of, but yeah, plenty of places. Goulbourne's quite a big, Ashton's quite a big place. Skelmersdale, I mean, there is one on the edge of Skelmersdale, but you could stick another one in there. Standish, there's gaps. There's gaps even in somewhere like Wigan that's well served by that. So yeah. Anyway, that's kind of that bit there. So let's move on. I mean, the other thing I'd say is just the number of stores that they are now opening in alternate locations than the high street, because I mean, to some extent, some high streets are obviously dwindling in terms of footfall. More people go to out of towns, shopping centres, and different things, and and also just the increase of the made to order locations. This is a number that's grown strongly. You know that there's 200 more now than there was a year ago, and that will start to sort of show through on the numbers as well. And I think this made to order, I mean, how much expansion would there be for evening Greggs and for sort of hot food Greggs, not warm food Greggs? Okay, just to be clear. And when you look at the expansion between one year to the next, so first half of 24, the made to order sales were 80 million. 12 months later, they're 95. So that's a 15 million growth period to period. And the number of stores, I mean, this 340, again, this is quite a lot of timing thing, that these 340 are now available in 2H25, but these weren't all available at the start of 2025. They've come online during this year. So I think that actually is going to make a really tangible difference. Nowhere is that reflected in the share price. The food delivery, this period to this period isn't spectacular. It's 5.5, but that's 5.5 million in 6 months. So that's 11 million a year, and that one is 30 million a year, just to be clear. So I mean, it's not as small as all of that. And if you actually went back to 2023, I mean, this number here, the 70 million, is a massive increase on the 2023 level. So again, very impressive. The app growth I thought was spectacularly good. Look at that. I mean, growth of 88 million. It's in 6 months period to period. So there's now about 25.7% of sales are going via the app, which is great, because that just provides the intelligence, the insights, and they say those that use the app buy more regularly, probably because they're getting little offers and little, like, but also just, I mean, I said it to somebody, like, if I went to Aylesbury, like, oh, welcome to Aylesbury. We've got a Greggs in so and so location. So if you're popping by, there's a half price coffee for you. Like, that would just make you want to go there, wouldn't it? Because you'd be like, oh, like, I've never been to Aylesbury. I don't know my way around Aylesbury. But oh yeah, the app says that. I just like, oh, stick it in. Oh yep, Google Maps. Oh, there we go. Great, half price coffee. Happy days. 50p, not £1. Happy days. And it's that sort of thing that just makes business. That's how you get more sales, is just engage with the audience, and just kind of just things like that. So kind of lots of things that I think were just missing from the analysis, that hopefully this analysis gives you, that gives you some food for thought, and why I believe Greggs is a very interesting investment. So all good stuff around the outlets. I like that. I mean, that's, and at the end of the day, I mean, you've got to be a clean business. I think for this sort of, brand matters. And you think how many tarnished brands there are in the food industry. I mean, there is quite a few, to be fair. Bite-sized Greggs is another sort of initiative. So, rather than having shops that you walk into, just kiosk, hole in the wall type thing, train stations, for example, that kind of thing. Right, that brings me on to this, which is the pièce de la résistance. So, Greggs has been selling through Iceland for years, for 13 years, actually. And is very successful. If you go to the Iceland website and say, show me the top offers will be Greggs. And why are they top offers? Because they sell well. So that's why Iceland price promote them, because they get traction. They get sort of like four. I think currently, if you go to the Iceland website, there's a four things for 12 quid. So you can get 8 sausage rolls, I think, or 8 pasties for £12, which obviously is, that's what people want to do. Great. Now I did a little bit of, and this is how I invest in things, is I'll just go to an Iceland and just ask the till operator. I mean, they're sat there bleeping away, scanning the things, bored as anything. You just chat to them, like, how's your day? Da di da di da. Like, I notice, like there's like these Greggs products. How many of those are you scanning through, like today? Like, are they a lot of people buying them? And people are happy just to chat to you about, like, oh yeah, yeah. I'd say it's, like, yeah, like, oh, this many an hour and this like that. And if you know that there's this many an hour, I mean, it's not cast iron proof and scientific. And obviously, Greggs themselves don't disclose how many units they're selling via Iceland. But I came out with a number of 200 units a week. Now, Iceland stores are open, open 7 days a week, and obviously it's short day on 6 hours on Sunday, and then it's, I reckon, about 10 hours the rest of the week. So I mean, I could probably say that 66 hours, but I've gone with yeah. So in 66 hours, three packets of Greggs is going through each shop per hour, per week, per year. Okay, 1,000 stores. So you're talking 10.4 million units of Greggs stuff. Okay. Um, RRP, let's say £1.60. I mean, special offer, it was £1.50. Normal price £1.75. So that's where I'm getting the £1.60 from. Again, that's just, once you take into account some price promotions, then probably works out at that. How much does Greggs get of that? Well, I don't know, but like, it would be normal to sort of say, well, Iceland are going to need some skin in the game, so let's give them 50p of the £1.60. So they're getting about 38% margin. Greggs is getting the other 62, and obviously having to manufacture it, deliver it, blah 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 blah. So that £1.10, obviously they've not got to, they've got to manufacture it, got to stick it in a packet, but they're not having to cook it, they're not having to have people serve it in their shops, they're not having to throw it away because it's gone off. Obviously, frozen food will last for a period of time in Iceland freezers. So you've got less food waste. So there's lots of reasons to think that the profit margin on these things is above average. I don't know that for a fact, but I would guess that that's probably the case. And Iceland revenue, therefore, £1.10, 10.4 million. I mean, you're looking at about 11.4 million a year. Again, that's just an educated, reasonable guess. I don't know that. There's no way of knowing that, particularly unless I did a lot of surveying of a lot of Iceland till operators up and down the country. Maybe I could get a better, a more educated guess, maybe, but I wouldn't bother doing that. But you get the idea that 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 is sort of what it could be, and it's not an unreasonable number. I don't think that, you know, you go on TikTok, you go on all these social media. There's a lot of people, a lot of, like mums go to Iceland. A lot of people yabbering on about oh, I've got my Greggs in for the week. Like, you go and look it up yourself. I've done that, and I was like, oh, okay. So people do chat about the fact that they're buying sausage rolls from Iceland that are Greggs branded. I mean, it does have a reasonably strong brand to it because it's never been through sort of any sort of negativeness, has it? It hasn't been part of the horse meat scandal, hasn't been, like, yeah, it's a fairly wholesome brand. Anyway, the news is that Greggs have signed a deal with Tesco's. Well, how many people go through Iceland each week? Or sorry, how many go through Iceland each day? I didn't ask a till operator. I, I just looked it up because you've got the retail monitor that will tell you that it's about 0.75 million people per day shop at Iceland. So that's a lot of mums. How many shop at Tesco? Well, the answer there is 17 million. Well, how many more is that than that? Well, it's about 22.7 times more, 22.67 times more. That's quite a lot of people. If I take that number, multiply it by that number, that percentage, I get potential revenue, Tesco's 260 million. Now, obviously, that's, again, it's not a completely scientific number, but I mean, if you're getting 260 million on top of that number there, okay, that is pretty impressive. I mean, that is like that news came in, I was looking at it, I was like, the share price has just tanked because people say the profits are down. But I'm looking at the profits down, and they're not really down. They're just, you've got certain things going on that are short term in nature that will reverse out in time, that are timing issues, and there's also a bit of inflation, which obviously again will come out in the wash. Prices go up to cover the cost of inflation. The underlying number, even without that Tesco's deal, is very impressive. Uh, New store sales, very impressive. I mean, again, I don't know whether that's 6 months, 12 months, or that's what the full year effect of that number is. I'm assuming it's half a year average. But again, and cost savings. So they've managed to, like again, over 12 months, it's 3.7 would be 7.5 million a year. Not bad. Not bad. Obviously, a few things here with finance income, lease charge costs. Lease charge costs you'd expect. So you're opening more shops, you're going to pay for more shops, right? Refit phasing. Well, you've accelerated your refits, so that's hit your profits because you're investing faster than you anticipated. Your finance income is increased in cost because you're borrowing more to do your investments more quickly. Like, none of that really justifies the share price dropping on the bad news of lower profits. Like, what nonsense! Absolute nonsense. And the cannibalization, what nonsense! You go to any part of that store finder and you find yourself some Greggs locations, because I assure you they are there. You just go to the shop finder and you'll find them. So don't tell me, and that's sort of on, like, almost like looking at high streets, looking at little towns. But what about sort of motorway junctions? What about sort of like just off motorway junctions? What about supermarkets? What about hospitals? What about other places where people congregate? What about sports places? There's all manner of places where Greggs could stick themselves and make good sales. Like, there's a growing population into Britain. Like, we're not eating less. So yeah. Anyway, I think this whole thing of cannibalization is just complete garbage. Even if I do say so myself. So I guess the last thing I'm going to say, and I did sort of put together slides and I haven't really used them, but let's just sort of, I think we've probably covered these points that, the manufacturing. Oh, and yeah, I mean, the other thing about the manufacturing is that obviously this is all sort of, stuff that's going on in 2026 and then 2027. But like in what, 12 months, 18 months time, all of that investment will be done. It will be complete, and that there's sort of a time in the future where capital allocation. I mean, yes, they will carry on investing back into the business, and they say 5% of revenue. So on 2 billion, I mean, you're talking 100 million a year. Fair enough. Okay, so there's 100 million that's going to be going back into the business. They're not going to stop investing. They're not going to stop refitting. They're not going to stop, and I would hope that they go and in fact, in this article, I do talk about the whole thing of kiosks, because trials of kiosks. So they've done it in 6 shops. Will you imagine if you put kiosks in every single shop? I mean, that would potentially sort of free up 2,618 Greggs workers who work in 2,818 shops. So there's at least one person per shop that's taking the money, that's sort of saying, oh, what would you like today, sir, madam? Sort of like going away and sort of doing it all. They sort of, why does the same person take your order, don't go and do the drinks, then go and sort of grab the stuff from the counter, then serve it to you, then sort of take the money, then give you your receipt, like all of these little steps that one person is doing. Like, why not just turn that into a kiosk and then just have people that are focused on serving, have a drinks person, have a food person, have a something else person, whatever. Doesn't make any sense to me. When I go in a Greggs, like, the thing that it always strikes me, right? I go in a Greggs, stand in the queue, right? I get served. I look behind me and the queue's longer than when I started. And I always think, like, wow, like, if I had a queue this long, I'd be doing something about this queue. Like I don't know what I would do. I do know what I would do. I put kiosks in because I've seen them work in like even like I don't know, like Dublin Airport is a good example. Dublin Airport is like ridiculously busy, and there's hardly any food places in there. And there is one fast food place, and it's called Burger King. And that Burger King, I mean, honestly, it's like a zoo. Uh, and they are literally, I mean, they are literally through their kiosks. They've got something like 20 kiosks, and those kiosks are just, there's people queuing for the kiosks. There's that many people, but they absolutely tear out the orders one after another. Boom, 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 boom. I mean, if you lined up a Greggs store against that Burger King in Dublin Airport, I mean, the Dublin airport has got to be per person. I mean, like, not even just that there's more people in the Burger King, but per person, they must be pushing out those orders at least twofold to what Greggs are doing, twofold, maybe more actually. So I think this is something that will need to happen, and that will make a tangible difference to the profitability of Greggs. So when people say, oh, you know, like it's reached its zenith, it's reached its peak, absolute nonsense. You know, there's lots more they could do with the store format. There's a lot more they could do with the opening hours, with hot food. Um, but also think about this Tesco deal. Okay. Yes, they've got a deal like they've got with Iceland, and it'll be pasties and pies and sausage rolls. And, you know, there's about 15 products. But Greggs is sort of starting to do other things. Pizzas, they're starting to do other things. So, what about if Greggs sort of go to themselves and go, huh, guess what? We've got a really strong brand that people like to come in our shops and buy. They also like buying it and taking it home to put in the freezer. And they talk about it on TikTok and social media about how they've got their Greggs in for the week. We've got a really strong brand that was nothing to do with horse meat or nothing to do with, you know, sort of like zoonotic diseases or other things that, you know, the various scandals that have hit other food companies over the years. I'm not aware that Greggs has ever. It's got a wholesome strong brand, and also a brand that you could stick to pretty much every type of food, because I mean they're not, I mean, okay, yes, they are known for their sausage rolls, da da da, but I mean they've got healthy foods as well, and they've got other things as well. So like, to me, there's not really a great limit on what they could do with the brand. But what about just becoming like, you know, you've got the factories as well. I mean, they're increasing their factory capacities. I mean, that alone could just become a massive business, like billions of sales of business that you know, that because they've also got the physical brick, you know, they've got the bricks and they got the clicks, you know, that they've got that whole sort of piece around expansion in that area as well. So there's lots and lots of areas of expansion, plus physical expansion. And once they've saturated Britain and you know expanded in Northern Ireland, you've then got Southern Ireland. I mean, Southern Ireland culturally is no different. You know, there's an opportunity there for sure for Southern Ireland, and then there's other European countries that love British pies and pasties. They just do. I mean, the Spanish are a great example of this, and I know this, that the Spanish adore. Like, you watch tourists go to a tourist town and go to a Greggs or go to a pie pasty shop. Look at the people that are going in there. It's not just Brits; it's tourists. I can tell you, it's tourists because I sit and listen to the language, and yeah, Spanish. You know, Spanish people love Greggs. Greggs would fly in Spain. Absolutely fly. Absolutely fly. I'm convinced of that. France, I'm not so sure. I think somebody told me that once upon a time, Greggs did a little foray into Belgium. Not sure. You know, they eat mussels. Is their mussels and blonde beer is their national dish, I think. So that's a bit different to Greggs. I can't see Greggs doing white wine mussels and garlic anytime soon, but who knows? You know, as I say, the world's your oyster or mussel. But you know, there are countries. I mean, Germany's another. That Germany have a long tradition of, you know, 50 types of sausage and things like that, and the bratwurst and all those kinds of things. So, could Greggs make it in Germany? I reckon they could. So Yeah, I think to conclude, and this is quite a long video now, so apologies for that. But to conclude, whilst consumer brands aren't my natural hunting ground, I think there's lots of reasons to feel positive about Greggs. I think the automation, the strong marketing, the brand, the fact that the profit, this profit warning that people are babbling on about, this cannibalization that people are babbling on about is like I don't see the evidence for that, and certainly not in the numbers. I mean, yes, people are talking about it, but that doesn't mean it's real. And yeah, I think with the investment that we'll see a step change in profitability. The other thing I'd say is that yes, they want to sort of put money back into the business and they want to keep a strong balance sheet. Fair enough. I want them to do that as well. But they do also say we will give you a progressive dividend. So if, let's say, earnings increase to say 80p, I mean that would be a 5% plus dividend. They also want to, I mean, look, I talked earlier on about nearly 1 billion of investment into the business. They say there, look, that they want to selectively grow, um, basically where a return on investment of upwards of 25%. Now, I've been talking about 10%. Yeah. So 750 million would return 75 million a year. I mean, they're talking 25, folks. Like 750 million invested would generate 190 million of profit a year if it's ROI of 25%. Think about that. I mean, I don't know that that's going to happen. 25% is a big number, but that's what they're talking about. That we will do further investment if it can deliver an ROI of upwards of 25%. So that's like 20 to 25% maybe. Uh, as I say, I mean, they won't have made those investments on a whim. They will have made them because they've got a strategy and they've done costings and they've worked out that the cost of, the unit cost of delivery, the unit cost of provision will drop by this many pence per unit, and that will add up into the millions in terms of extra profit. And then, with everything else, anything left over, then that can go to shareholders as well, is what they're saying. So special dividends, buybacks are on the cards as well. So look, I mean, will it shoot up tomorrow? No, probably not. Will it is this an investment where you could expect to make a good return in the next couple of years? I mean, at the end of the day, you make your own investment decisions. This isn't advice. This is just me talking my opinion on where I see this going. But I could see, certainly from the numbers, certainly from the evidence, that I think it's quite misunderstood. I think, yeah, I see brighter future ahead for Greggs, and as it has been for many years. I don't think anything has fundamentally changed. I think the things that have actually changed is a really big step change in improvement of efficiency and of marketing, and they're doing all the right things. Digitizing, doing the stuff with the app, getting to know their customers better, putting in better efficiency to deliver to across the UK. It's all good, solid stuff as far as I can see. So anyway, that's enough from me. I hope that's been useful. Obviously, it's quite a different take to some of the other videos I've seen about people pontificating about Greggs. So if you enjoy this video and the others, there's I think 80 other videos that I've recorded. Do sign up with like and share below. Really appreciate if you would. My Substack, you can subscribe to that. There's 658 articles covering, I think, getting on for 200 companies. So lots of stuff to read if you're so inclined. That's enough from me. Cheerio from the Oak Bloke. Cheerio for now. Cheerio.